Hello everyone. In previous lectures, we have discussed the format of balance sheet, and also we have seen the difference between non-current assets and current assets. That we have discussed about share capital and separate legal entity concept. Now, in today's lecture, we will be discussing about liabilities and category of liabilities. So, liabilities being classified into two categories. First one is non-current liabilities, and second is current liabilities. So we will see the format of balance sheet, and from there we will discuss current and non-current liability. So if you see, first one is non-current liability. What is the meaning of non-current? We have already discussed about non-current assets and current assets. These non-current liabilities and current liabilities, they are very similar to non-current assets and non-current assets and current assets. Now, if I talk about non-current liability, so I will give you the example. Let's suppose what you are doing, you are running a business, and what you have done, you have borrowed loan from bank. This is your company, and you are borrowing loan from bank. Right? And bank has given you loan for 5 years. Here, let's suppose it's given you loan, and duration of this loan is 5 years. The maturity period is 5 years. Now you have borrowed, let's suppose, 100 crore from bank. Right? Here duration is 5 years. And what you have done, you have also taken overdraft facility from this bank. You have taken overdraft facility from bank. Now, what is overdraft? Suppose overdraft facility is of 10 crore. Overdraft facility means where you will borrowing short-term loans from bank. Regularly for your business, what you will be doing, you will be borrowing short-term loans from bank. So let's suppose the maturity period of this overdraft is 3 months. So let's suppose what you have done, you have borrowed some money from bank, right? Let's suppose you have borrowed 10 crore rupees. So within 3 months, what you will be doing, you will be repaying money to the bank. And again, what you can do, again, you can borrow a new overdraft facility and you will be getting their 10 crore. And again, within 3 months, you will be repaying this money to the bank. So basically, this overdraft facility is for working capital, right? We have seen that what is working capital. If you're buying raw material on, so it is a part of working capital. Now, I will give you brief about overdraft. So let's say you are buying raw material from supplier. This is your supplier, and this supplier is giving you raw material. The supplier is giving you raw material to you, right? And let's suppose this supplier has given you credit of 90 days. 90 days or 60 days. So what you will do, you can use your overdraft fee to make the payment to the supplier, right? And later on, what you will do, your business will make the payment to the bank. So this is what a overdraft. Now, if you see here the maturity period of overdraft is lesser than 1 year. We have seen the 1 year condition in case of current asset and non-current assets, right? Now, this condition will applicable here also. If the maturity period of any overdraft or any loan is lesser than 1 year, that loan will be classified as a current liability. If the maturity period of any loan or any borrowings is greater than 1 year, it classified as a non-current asset. So I will write it down. Non-current asset means the liability whose maturity is greater than 1 year. It will be classified as a non-current asset. Now, non-current liability. I'm absolutely sorry. Then if I talk about current liability whose maturity is lesser than 1, it will be classified as a current liability. It will be classified as a current liability. So here you can see, if company is borrowing loan from bank and whose maturity is greater than 1 year, so it will be shown as a current non-current liability. When company issues debenture, we will discuss about debenture in detail in coming sessions. Company issued debenture, it means they borrow money from public, right? If the company wants to borrow money from public, I am not saying that company is issuing share here. If company issue share, they give ownership. But if company issue debentures, it means they are more borrowing money from public as a loan. So generally, the maturity period of debenture is 10 years or maybe 20 years. So if maturity is greater than 1 year, then it will be recognized in non-current liability side. Now, in current liability side, we record overdraft facility. We have already discussed about overdraft facility. So overdraft will be shown in current liability side. Creditors, if you're buying some goods on credit from your creditor, that will be shown in current liability side. So we have discussed about non-current liability and current liability in detail. Now we will be doing questions from annual report, and I will do some examples also for a better understanding. Thank you.